Hello and welcome to the CEO1440 Show, the Mortgage Broker Builder Show, where we break down mortgages, life, and maximizing your 1,440 minutes every single day. Got a pretty exciting guest here. Got to know this man over the last few months. Very impressive with what they're doing over there, but it's Shah Tehrany, the CEO of Madison Mortgage Services in New York, in the Big Apple. Had the pleasure of going out there and sitting with these people. I try to stay out of big cities, right? Because I'm a hillbilly from the sticks. So I had to go there, expensive Ubers. I got the tariffs in New York to ride an Uber were crazy. It was like $36 in just fees. I can't believe it. It's a travesty, but welcome. How are you?
Good, man. Good to see you. Good to be here.
Oh, for sure.
Here in my own office, actually. It really is good to be here. So
yeah, no, you've got a beautiful space there.
Thanks, man.
So I just want to kind of walk back and I like to give people just kind of a quick explanation of what I do. We can get into you and what you're all about, but this is the Mortgage Broker Builder. I like to think that I help loan officers, mortgage brokers, companies get their poop in a group. Pretty much everybody that I talk to has a couple of key constraints inside of their business. And 28 years doing this, I got a 4-digit NMLS. I've worked at some of the largest companies, have launched brokerages, have helped people stumble along. I feel I have a pretty unique ability to identify key constraints inside of someone's business and help them kind of get that unclogged and move forward. And I started working with Madison Mortgage a while back, just doing some basic sales training, but they are a company that's got a lot of their poop in a group. And I think a lot of that just has to do with you and what you're doing there. And just Madison Mortgage. I'm happy. I've got a hat behind me. I should have actually put it on. I love the hat. I still get a lot of questions on it.
Yeah.
I don't know where it is. I'll pull it out. But it says "Make Rates Great Again."
Yeah.
And it's been a great conversation starter. So
it's fun.
Let's just kind of step back. So how I've looked, right? You've been in the lending space, 20 plus years now?
Yeah, man. Almost 20 years.
And about 5 years ago, it looks like you kind of went from, you made this transition over into the brokerage space.
Precisely.
How did that happen? How'd you get there? Can you just kind of walk me through your career?
I spent, I think a lot of folks that sort of enter the mortgage business, I spent a lot of my time in retail. It's kind of where I started. Ironically, I actually started at a broker, but it was a very short stint. And I there it is. Make rates great again.
There it is. Make rates great again. Madison Mortgage.
Yeah, you're working on it. So yeah, I sort of started in this space. I started in retail, and it's like the old adage, you don't know what you don't know, right? So it was good. I mean, I did really well in retail. I built my business. I learned the business, and I built my team actually in retail, and started to really scale and do well. On the retail side, originating. I don't originate anymore, but that's kind of what my journey was in retail. And then I just kind of was tired of working for someone else and having them control. Honestly, a lot of the driver was the technology architecture, right? It was it was so legacy, and it was just the process wasn't good, and I didn't necessarily agree with a lot of the personnel decisions and the culture around how a lot of these mortgage companies were run, and so it was just kind of time to start my own. And so, New York's a tough state to do that in. But we did it. It took a while to get a license, but we got it. And, we started. We're in year 5. It's exciting. And, we're doing some big stuff.
So year 5, you guys are licensed in 30 states? Is that
actually,
right?
as of yesterday afternoon, we're in 36.
36.
Yeah, we just got to Alabama yesterday, so.
Okay, exciting. Good business down there. I've got a couple of people that work in Alabama.
Yeah, no, we don't, but we're just going after every state. We're gonna go 50 states licensed as part of this new model, this new flat fee model that we're deploying. So we just want to.
Got it.
The one thing we never liked actually is that we just don't like to tell a client that we can't do a loan for them because we don't have a state license, and so we've always had quite a few state licenses for most of our tenure. And so we were sitting at 34, 33, 32 for a while. I think it was actually 32. It was 32 for a while. We've added 4 recently.
Okay. Yeah. Nice. Yeah. And I think, maybe we'll touch on it. It's down here in my notes for further on, but you had kind of brought it up. So you launched 5 years ago, trying to figure it out, right? You still have questions to this day. One thing I can say about you that I think is pretty neat, and I've told people this before, you provide feedback, whether elicited or not. And I think that it's
True.
also something that you take on upon yourself, in that if you don't know something, you're asking a lot of questions, just
Yeah.
eager to know,
Yeah.
which I think is different from a lot of people just across the board. There's a lot of egos, hubris, like, oh, I already know everything. Like, and I appreciate that you're not like that. It was one of the things that I actually liked the most, was that you're providing me feedback and shit I didn't want feedback about. But you know what? The
I'm
feedback was
trying to make
actually
you better
pretty good.
too. Like I want to make everyone
Yeah.
around me better, man. Like, so and you're right though. Some people just aren't receptive to it. And so but you catch that pretty early, like who is and who's not receptive, right? To collab and feedback. And not that listen, I definitely don't know it all. I'm definitely not the smartest guy in the world. There's a lot of guys a lot smarter than me that know mortgages a lot better than me, but I'll say that I think I have a pretty good handle on it, and I think I have a pretty good handle on people, and so yeah, I agree. I think it's fun, but for me, like that's what gets me up in every day is I want to learn something new every day. I want to get better every day. I want to be good to people that are around me, and help other people grow. A lot of the juice in this business, a lot of the excitement of the business is to see a loan officer who joins us that was doing 1 or 2 loans a month and now he's doing 10. Right. That's exciting for me.
Right.
Like I've had a really meaningful impact on that person's life. I might have opened a door or showed them a way to approach something that's different than the way that they were doing it. And the money's of course great. I want to make money. You can't exist without it. But that's a lot of the driver for me as well.
And I think that that's apparent. And, we're doing this and I'm rooting for you guys with your change, but just character of people. And there are people you can tell that are in it for themselves. There are people that are in it for someone else,
Yeah.
like the other person first. And I've just, throughout my career, for the most part, when people put someone else first, they have a tendency, one, to make a lot of money themselves, but also, push those people along. There's a quote, it's people don't care how much you know until they know how much you care.
Yeah.
And I think that you exemplify that. And I like to give kudos where kudos are due. I think that as men, we don't tell people they're good things. We just like to give them shit. So it's something it's a good quality of yours. I admire it.
Yeah.
So that kind of just takes us into, and I'd love to get into, our coaching and some of the stuff that we've done for your team.
Sure.
But you brought it up already. So you're making a change. You're 5 years in, successful, the company's doing well. What the hell has you like wanting today, right? We had a conversation. You're like, I think I'm changing our business model. Thought about it a lot. And you flipped from, right? You had all the control. You had your own loan officers, teams, essentially net branches of Madison Mortgage. And you're going to flip the script and go and become, they call them super brokers or whatever, where you're going to have a flat fee model, which I think is super unique because you're in New York and very few people have it.
Yeah.
But what was kind of the mindset there to go through and essentially do, like, it's not a 180 shift, but it's a 120-degree shift. Hey, if you're here, it's because you understand that the world is changing at an alarming rate, and you understand that big data is going to dominate as we move forward. Either you're going to use it to grow your market share, or somebody's going to use it against you to grow theirs. If you want to dig a little bit deeper here, take a look at your own business, figure out and identify some key constraints, maybe some things that you could do a little bit differently to grow a little faster. Here's what I can tell you. After 27 years of doing this, helping well over 1,000 loan officers earn hundreds of millions of dollars in commissions, there are a couple of key constraints inside of your business. I don't know what they are right now. I just know that they exist. So if you're curious about this, let's get on a strategy call. Take 20, 30 minutes. You will walk away with 1 or 2 actionable items that you can do more business as you move forward. There'll be a link someplace here on the page. I look forward to personally meeting you.
Yeah. It's a big shift. And I think the answer is really simple. I mean, I've been thinking about this for a long time. I've been observing that model for a long time. Once I got in the sort of wholesale game and started to see that some people do operate that way, I've been looking at it and watching it and studying it and modeling it. And certainly we've grown to a level of scale now where I think it makes sense for us, right? I think, the next 15 years of this business will be different than the past 15 years. And I think it's a model that really serves loan officers well. I think I can scale Madison more effectively that way. I think it's better for me. I think I'll enjoy that process, that journey more. I think the company will be better served, with that model. And I think most importantly, and this is what really tipped it over for me, is like, it's great for the loan officers, man. It's really great. And I have so many of them, and you've met some of them, John, here, right? You've met all of them for the most part. They're just great. I love them, and I want to see them do well. And so, this model gives them the ability to earn more. It gives them a little bit more to manage in terms of cost and risk, right? So that they're getting a little bit of that with it. But it helps us scale. They're excited about it too, because they know that it brings big things for Madison long term. And so the reason to shift was really just simple. Like, the market is moving towards a direction where margins will become more and more compressed over time. AI will definitely change the landscape of this business. And it's like, why shouldn't consumers have access to really great rates and cheap rates and not have to get margined out? Like, why are people paying such exorbitant rates? It's more prolific in sort of New York. Like, New York is a hard state to operate in. The loans are challenging to execute here. And so, the margins tend to be a little higher because there's more cost, right? And so I just kind of want to debunk that. And I think it's a great opportunity to do it. There's some proof of concept already. And I just feel like it's what the next 15 or 20 years for me looks like.
Yeah, I think I recently mapped out kind of my journey through the mortgage thing on like a timeline. And if I go back to, when I started, it was handwritten 1003s.
Yeah.
It was, it was a different world. And then it got into where your company was providing you a laptop, but all of the tech sat on a server someplace. We had redundant servers and these big diesel powered generators to make sure that the AC, the temperature stayed between certain things. Otherwise your whole system would crash.
Yep.
And then you were, as a loan officer, you were super heavily reliant on that company to make sure that their AC didn't go out in the server room. Otherwise you were SOL and you couldn't do business. And then it moved to, I think the crash in '08 happened and people couldn't spend money like wild animals. And so that was the beginning of where we are today. And things got incrementally better, little slight improvements. People started layering in tech and different things to the point today, where you can go and move your license and get a complete tech stack today. There's individual brokers that have tech stacks better than some of the nation's largest lenders because they're actually strapped by their legacy,
Exactly.
$7 million Salesforce build on top of Encompass.
You got it.
And so I do see it as a trend. And I do think that it's super exciting, I think, for loan officers and people like yourself, but also scary as hell. If you're a loan officer that's just been sitting there blaming your employer for bad leads and like blaming them for a long time for your lack of execution, it's going to now fall on you. You're going to have to execute a little more, but
sure. But it's going to be good. And it's really, the reality is that brokers and the wholesale channel represent only 25% of the loans that are actually executed in this country. And I think, the channel will grow. I think it's healthy for it to grow. I think it's healthy for the mortgage business as a whole, for the wholesale channel to be larger, and for optionality to be more present, and for lenders to sort of earn loans as opposed to just getting it because the loan officers work there. So I just think that's, from a system perspective as a whole globally, I think that's the right model.
Yeah, I think that the more, well, you actually mentioned it in New York, right? It's hard to get a license there. The more regulation there is, the less players you have in the game, the more expensive it becomes.
Yeah.
So often governments want to do good deeds and provide their constituents with better pricing. Yet as they add regulation in, it actually just less optionality creates higher pricing. Like, loans are significantly more expensive. I remember back in Cook County, they rolled out a bunch of things years ago. So in around Chicago where you couldn't do things. And I was then at what is now today Rocket. We made a decision just not to lend there.
Yep.
So you took out like everybody there just got less options.
They thought they were making it better. They actually made it worse. Right?
Well, Yeah, I mean, significantly worse if you were looking at getting a good deal.
If you were living in Cook County, you thought those things might help, but in a lot of ways, it hurt, and lenders backed out because they were like, "Ooh, this is too complicated," and they just didn't want to do it, right? So,
Yeah,
um,
too much risk.
yeah, too much risk, or it just wasn't written properly, but that's the nature of things, right? Like, overall, I think our country's heading in the right direction. I think the mortgage business is mature, and I think AI is going to help a lot.
Yeah.
I think that the business has really evolved, and it's fun. It's exciting to see what the next 10 years, 15 years are going to look like.
So, and again, we'll do a little pitch here, but so Madison Mortgage, flat fee, New York, 36 states. You decided to make the change. I know you guys have great tech because I've been there. Somebody else, right? They need to talk to you to actually find out what they get to come and work there.
Yeah.
But what has you, right, most excited about the move? Is it just being able to help more loan officers and kind of cast a wider net?
Yeah, I think that's super exciting. Working with more loan officers, seeing a lot of them come here and join, and see how good our process and our infrastructure and our technology is, and how like the primal complaint you get from loan officers, and I talk to so many of them now on a daily basis, is like, I need more support. I need more support. I need more help. The process isn't fluid. There's gaps, and it's like, that's kind of what we do. Like we are a process engineered company, right? Like, you can't exist without great process. You need great people, you need great process, you need great tech. It all has to blend together really nicely.
Right.
And so I feel like we're there and we have it. And I want to give more people exposure to it, right? I want to help more people grow. And that'll help us grow, right? So that's what's exciting about it. And I also think there's a lot of retail originators in New York, like I was, and like a lot of the people that are here with me, that are suffering, not knowing that, like, there's a better way to do this, right? There's a better way to do mortgages as an LO than working for some of these small, mid-sized bankers in New York, even the large-scale bankers. I mean, candidly, a few people just joined me from Loan Depot. There's more coming, and nothing against Loan Depot. They're a great company, but
Right.
you know, for in that specific branch, those guys are suffering and not getting the level of service that they need, and the support that they need to be able to execute loans, and it's hurting their business, hurting their clients. So I'm excited to help them. I'm excited to roll out what we've constructed here to more people and get more feedback from more folks. That's going to make us better too. Like, we're going to keep growing and evolving.
Yeah, over the last couple of years, I've launched dozens of brokers, right? I helped people that worked at companies open up their own shop,
Exactly.
right? Did everything soup to nuts. Some of them I helped, form their LLC. To other ones were tweaking, call campaigns at the end. And
Exactly.
one of the biggest hurdles, anybody that was on the East Coast, New York, New Jersey, right? They needed to write loans. Like, if you're an East Coast banker, there's a good possibility that 50% of your business from a volume standpoint comes from the state of New York. They were really boxed out. They couldn't go and start their own thing. They had super limited options and would often get stuck working at some place that was less than what they could have gotten. So they were handcuffed by the states that they were licensed in and where their clientele was.
Totally.
And those people, often the advice I would give them is, well, you can't control where you work, but you can control these things. Make sure to build a personal brand that is portable, where if something changes down the road, your brand moves and nobody knows the name of the front of the jersey. They just know the name of the back. Make sure you're running your own CRM independent of what the company's doing. So if your company goes out of business, you don't go out of business.
Yeah.
So I gave them these like tidbits.
It's good advice.
And now with someone like you in it there that they can actually move to, my hope is that they took the advice and that they have their poop in a group. And now you're seeing an option like, hey, you could go and work for a Madison Mortgage, get access to a whole lot of different brokers, have some people that understand you as an originator, the last time they originated a loan, or they actually have originated a loan. So I think that the trend will be really good for you, and having that New York license opens up a whole lot of people that can't go to, one of the other people that fill your LinkedIn IMs or whatever, the random text messages from somebody that's, going to revolutionize your world. So I think that it's really cool. And anybody that's listening to this, if you are in New York and you just are thinking about, maybe making a move, or maybe you're not even thinking about it, just follow Shah on LinkedIn. He's like posting some videos, just start looking at it. I think that there may be options if you're not ready today, 6 months, 9 months, but make sure your business is in a position that it can move. Because if it's not, then you're not in control. You're just working for someone. So that would be the advice I would give. And I think you guys are well positioned to be able to do that really good.
Yeah. Thanks, man.
So kind of, from there, we did a bunch of things with your team, and I've got like some cool video takeaways and stuff. And we're working with, quite a few people on sales coaching. And I know that you're an advocate, or you believe in going out, hiring people, bringing things in. There's more that can be done by having other people do it than learning it all yourself.
Yeah.
Were there any big takeaways? You've been in the space for a long time.
Yeah.
Things when we came in and started doing some coaching stuff, working with your people, were there any takeaways or things that kind of surprised you?
Yeah, I think we knew enough to know that like we were really, really good at mortgages, but we didn't have like extensive sales training. I formally had never been through any sales training ever. So for me, like I wasn't perhaps the most qualified person to teach others just some of the basic sales skills, because I actually never really thought about sales skills, right? Like, and so when we connected, obviously, we vibed, and I think realistically speaking, I just knew that like I wasn't going to be qualified to coach sales and some of those practices, knowing your background with Rocket and sort of, the fact that you spent so many years in that space. So, obviously we jumped on, you'd been coaching, we did like twice a week stuff. And I think the biggest takeaways and what surprised me the most was just, so much of the approach that we took initially, as was like this, it was a harder sell. Like we were working, a lead type that needed, we thought, a bit of a harder sell. And we learned so much from you in terms of like, nope, that's actually not the best approach. The softer approach is much better. And it was fun to sort of dig through the science of how to approach this. And you have it modeled so well. You've done it so well. You've coached so many people, but and of course, this wasn't like kind of a one-on-one coaching, right? It was more of a larger company engagement, where these coaching calls were 30 deep, 40 deep. And the teams, really, really benefited. Like we really got much better as a result of the few months of dedicated focus coaching we did, some of the on-site stuff that you did for us. So I'm a big fan. And I tell everyone that, like, I think it's more expensive not to be coached than to be coached.
Yeah, for sure.
You know what I mean? Like, it's like if you're out there and you're an originator in the business and you're not doing 10 loans a month, you need coaching. There's other people that are out there that can teach you different things and different approaches to how to originate, including going to companies and they have people. But if not, John, you're a great option, right? Like is coming to someone like you and spending time with you. And it's like really looking at like, how are you approaching the business? What is your daily routine? How are you approaching leads? How are you getting clients? How are you going after realtors? What tools are you using in doing that? Right. So, my takeaway was just the soft sell, the use of tech and process, the sales cycle and the process that you follow, how you approach it. We obviously did a tremendous amount of call review, call scoring, call coaching. And it's evident like our teams are producing at a much higher level than they were prior to your engagement.
Oh, that's awesome. Yeah.
Thank you.
I tell people
Yeah.
I can't make any, you're welcome. I can't make any guarantees. However, there is pretty much one guarantee that you can always make. If you started doing something a year ago, you'd be in a better spot today and you wouldn't be any backwards, unless it was like, right, you picked up drinking or, like a heroin addiction. Like that will put you in a worse space a year down the road. But anything, even if you just take 30 minutes a night to go and view YouTube videos on sales,
Yep.
and you do that for a year, you're going to be significantly better in a year. And so if you're out there and you are just doing mortgages for the next 6 months, you don't have to do a thing. But if you want to still be doing mortgages in 2030, the industry's changing a lot. People are getting smarter, more savvy. You've got the millennials and the Gen Zs. They're sold differently than the boomers.
Yeah. Totally.
And how their threshold, how much crap they'll take from a salesperson pushing them until they tell you to go fly a kite is significantly different. So, right, hitting them with a hard close. So you don't want to take care of you and your family? Like, that doesn't work for a 23-year-old kid. He's like, no, I don't want to. And I think you're an asshole. Click. So it's a different world. And, me being an old dude now, I feel I have to spend twice as much time leaning in to try and figure out what the 25-year-old is all about. They're not wrong. They're just different. So
different. Yeah, exactly. So it was cool. It was a great exercise, one that I look forward to doing again and further and continuing to do. But for us, it was a really great experience.
You just got to keep those guys like running the reps. You got to keep them, you can't let your foot off the gas. I sent something to your team the other day inside of our community about Aaron Judd. Like, Aaron Judd's still hitting balls off of a tee. The same way he did when he was 8 years old. He was hitting balls off of a tee.
Yeah.
Yet the reason you keep doing that is if he stops, like, his game will fall off. He needs to continue to do the basics along with, the diet and the way they're making their bats weird now and all the things that Yankees do to win.
Torpedo bat.
Which is awesome, right? If there's a better way, the most elite are going to find it.
Yeah.
And there's the most elite out there constantly trying to find different ways. So I think that's super cool. What has you right now, right, as a CEO running a company now, making a transition, what has you the most excited in the mortgage space outside of things inside of your own company?
Yeah.
But just, is it the market? Is there something that gets you up in the morning and says like,
I think the answer is easy. The AI stuff, like what would the impact of AI be on our business? And the reality is, like, if you're in the business and you're not all over that and trying to figure out how to use it and apply it to your business, you're falling behind, right? And so I think there's enormous impact that it will have operationally from things like just taking applications, scrubbing applications, scenarios, reviewing guidelines and matrices to, we're already using so much of it in our business now. We don't, like, somebody has a scenario, we have an AI engine, you jump in and you type it in there, and it's a mortgage AI engine. It's going to tell you what lenders do what, where you could go with that specifically. It's called Mortgage Queue. It's awesome. To conversational AI, using it for how to communicate with clients, whether you're following up with documents, whether you're following up on applications, whether you're using it to make sales calls. I think in the next couple of years, we're at infancy, but it's starting to hit, and you see different, there's different providers doing it different ways. I mean, we're at the architecture level because we're building a lot of it ourselves, but that's what's really, really exciting. I think the mortgage space is going to change completely in the next 5 years. And so, I don't think the mortgage loan officer or the broker goes away. I don't think that ever happens, to be honest, because I think people innately need to speak to humans when it comes to like a home purchase or a mortgage. But I think the tooling will improve dramatically. And so that'll lead to more originators being able to do more volume with less work. And I think that's what will naturally compress margins so that clients wind up just getting better deals. Which is exciting because that's how it should be.
Yeah, I'm with you right there. I think that there have, I remember seeing some stats through the refi boom that, like UWM would put out with the number of clients that had PIWs.
Yeah.
And a bot would not have gotten the same.
For anybody out there who doesn't know what a PIW is. Yeah. Proper.
An appraisal waiver.
Yeah.
Yeah. But a bot would not have got the same numbers. Right, because the brokers that are there doing right, they're massaging that file. They're increasing the number of.
Exactly.
They're gaming it, right, or whatever you want to say. They're figuring out
how the loan works in the model where a PIW will hit.
Yeah, 64.99 LTV is different than 65, and you get it and you don't.
Yep.
But I see that some of that real easy stuff, right, like a work number and a PIW on a 57 LTV rate and term. That doesn't require a human being, never has probably, that some of that business goes away, but the good loan officers that still can communicate, talk to people, nurture it along, like there's going to be a need for them. And yeah, I think that they will do a lot more. I'm working with quite a few different, tech things on, loan officers getting a phone call. And this is the things that make me, phone call comes in, the AI listens to it while you're on the phone and prompts you with the next question you should ask, does a transcript back, lets you know exact notes, moves stuff around in files. Like it's getting pretty cool. And
Cool.
either
It's exciting.
Dan Gilbert used to say that, and he's the old guy that founded Rocket. He used to say, when the speed of business outside of your organization is moving significantly faster than inside, it means you're going out of business and just don't know it yet. And I think that was to your point. If you're not using AI and doing those kind of things,
like if you're still in retail and you're on Encompass and that's the only software you have, and you don't really have a CRM, and like, you're not like really growing and using tech well, like you're a Blockbuster Video. You're gone. Like it's only a matter of time, right? So, and that's that shouldn't create fear. It should just create. Well, perhaps for some it should, but it should. If you're in that model right now, or you're in that engine right now, like you need to get out, right? That's a sinking ship, and so it's exciting. It's exciting to see what it's going to do. I think there's companies on the forefront of it too. Certainly, the leader in the wholesale channel for us is UWM, and they just announced a partnership with Google yesterday, which was pretty exciting. They've been working with Google for quite some time now. So they're doing some great stuff too that'll help the wholesale channel as a whole, brokers as a whole, which is exciting. And but it's incumbent upon every company out there to make sure that you're integrating that stuff into your tech stack.
Yeah, the one thing that, and I don't know if you have something that like kind of scares you the most or is the most concerning. For me, when I look at stuff, right, if my job is to coach brokers, small companies, those kind of things, the one thing that kind of scares me the most, I don't even know if it's scared, it's just something to be aware of.
Yeah.
It's like kind of the big bad ghost or the big bad wolf, is that companies like Zillow, right, where they're getting people when they're searching for a rental outside of college, and they're getting their grips into you as just a property search thing. But their funnel is dialed into turning you into a mortgage lead, into a Zillow Flex client. So you're using one of Zillow's agents, and Zillow's going to take 30% of the commission, and you're going to get steered to a Zillow loan officer. And that ecosystem just keeps getting tighter and tighter, to where that's the one thing that I see for like the small broker, that today they need to be very cognizant of the people that you're battling against. It's not for the client that's ready to lock in today. It's the people that are getting in the funnel today that are still 4 or 5 years out. Like Rocket owns Rocket Money.
Yeah.
Rocket Money is not there. They're not trying to lower your bills. No. They're trying to create mortgage leads.
Yeah.
And they bring you in.
Rocket's an amazing company. They're smart. They just bought Redfin. They bought Mr. Cooper. They're making a lot of good business decisions for their business, right?
Yeah.
Which is the monster retail engine that they are. They're the pound for pound, they're the best mortgage company in America on the retail side. There's no question about that. But the cool thing is that doesn't create fear for me is that this is a multi-trillion-dollar a year mortgage business, right? And so it's like, we might the projections might be 700 billion or 800 billion in volume. Like there's a lot of loans to be done, and you're right. You're right. Zillow's going to capture some. Rocket's going to capture some, right? But there's still a lot out there, right? There's so it's just incumbent upon us as loan officers in the business, even at the small brokers, as you were referencing, like you got to get out there and make sure you're aligned with a good company, and you got to make sure you're staying on top of those leads, and you have some tech to actually do it. And building your relationships with the people that are sending you business, right? You could be an elite loan officer with 10 to 15 real estate agents that actually do business, like good agents, right? And so that's what I'm always teaching is like, pick your referral spots. Don't rely on leads, right? Like leads are great and they'll always be great. We'll always want them. But, a mature business in the loan officer game is to have a lot of referral contacts sending you business, and they send it to you because your execution is excellent, right? And so I think that Zillow stuff doesn't scare me, right? The Redfins and the Rockets, like that stuff doesn't scare me. I mean, not much scares me, but that doesn't scare me at all. I don't think that's going to hurt us. I just think their market share might get a little bit higher as a result.
Yeah, I think that people will be able to survive, but it's going to cut in. It's just going to be a little like small little slices that the people just never make it into their ecosystem today at all.
Yeah.
They're just, you don't even know. I talk to a lot of people that don't have their own website or a landing page. I don't need one. My clients don't ever transact there. They never go to a website. I'm like, they don't go to one because you don't have one.
Yeah.
There's a lot of clients that do go to them that just opt to go someplace else. So yeah. I think that for the loan officer, there's a pivotal point here over the next couple of years where the industry won't move that far away from you if you get in today and start doing and putting those pieces in place. And it bodes well for them being able to come and hang their hat with someone like yourself or one of the other companies out there. But it takes being proactive today to not let things get too far away from you. Agreed. To where you can't really catch up.
Agreed. Totally agreed.
So it's neat. What, outside of that, what are your thoughts on rates, kind of where things are at? Where do you see us? I have my own thoughts. And where do you kind of see us third, fourth quarter, let's say heading into the fall? What do you think kind of we're going to be at? What's the market going to look like?
Yeah. I mean, I think there's plenty of business out there now. Even it doesn't matter what rates are. Rates are just what they are. But if my prediction in terms of where Q3, Q4 lands, I think you'll see a lower rate environment. Probably something in the fives, hopefully in the very low fives, is where we'll land. I think. I mean, obviously, with the past couple of days have been quite crazy with what's going on with some of the, the tariff stuff and, some of those challenges in the financial markets as a result of this, sort of some of the moves that the president's making. But overall, I think, we're headed to a lower rate environment, right? There's some bumps certainly along the road. And I think if inflation, if the reads on inflation come in the way we want them to, and we don't see a lot of that, and some of the stuff naturally will settle over the coming months with respect to tariffs and some of the deals that'll get made, and I think you'll see rates come down. I certainly know this administration's focus is for that to happen, so that's certainly a good thing. I think it'll help a lot of consumers. We have record equity in homes. We have record debt. And so, it would be good for some folks to be able to access some of that equity that they've built. And inventory is also very low. So I don't see, a lot of people ask me, like, what do you think is going to happen with home prices? But I don't see them coming down. I really don't. I don't think you're going to get you might get a light correction, but inventory is so low. The demand continues to be so high. I think home prices are going to hold. I think rates will come down. People will be able to access some of that equity and use it to help maybe, clean up some debt or make some investments in other things. And so that's exciting. I think it bodes well for the mortgage market in Q3, Q4, Q1 of next year.
I think I'm right there with you. I think that there's a lot of uncertainty.
Yeah.
And the uncertainty today people want to know how it impacts them right away. But I've been saying for a while, I think that by August we'll see rates in the mid to upper fives, which opens up, just getting into that five handle opens up an awful lot of people. The volatility in the stock market, what we're seeing there. I read some stats the other day that 90% of the wealth in the stock market is held by 10% of the people. Yeah. So most of the people,
but I've seen there's a lot of different numbers that bounce around on that. But yeah.
Well, it was the
crazy stat
number that was right. I saw some different ones, but one was 87% or 88% of the market is held by 12% of the people. The upper 1% of all wealth owns 50% of the stock market. So the people that are getting, right, as the Dow goes up and down, it's not my client, right? And the lower 50% of wealth in the U.S. owns less than 1% of all equities. Yeah. So, and that's the people that we're dealing with. And I made a funny joke, like, I don't care if Kim Kardashian's net worth goes from $2 billion to $1 billion, she wasn't doing a loan with me anyways. Yeah. I'm not trying to solve her problems, right? She flies her private jet to Milan for a latte, right? She can spend $70,000 to get an ice cream. My clients are trying to scrape together some money with the down payment assistance program. So they've got different problems. So the stock market moving, while it impacts some people, it's not the problem that the bulk of the people that we're doing mortgages for speak to their problems, and they're a little bit different. So
we're
I'm pretty
focused on
excited
Main
about
Street, not Wall Street, right? Like,
yeah.
you know, and that's where our focus is. That's where our consumer base is. We have some high high net worth clients too, but and there's quite a few of them in New York, of course. But the average American's not focused on what's going on in the stock market. It's not really, or I should say, they're not. It's not hurting their pocket, right? What's hurting their pocket is the price of eggs, the price of gas, right? What they're paying for food. What are their other life expenses? I think that's more what we're focused on. So I think rates coming down will dramatically impact what actually happens in the U.S. economy, right? Because people will access cash in their homes. Affordability will change, right? Like if prices are high but rates are high, it's really difficult from an affordability standpoint. But if those rates come down, it makes things a lot more affordable, right? Your ability to buy a home might your price. Your monthly payment may change, $200, $300, $400 a month on your purchase. That's pretty dramatic, right? That's all your utilities potentially for a lot of our consumers. So, so let's hope we see rates, come down and stabilize into the high 4s and 5s.
Yeah, no, I'm very bullish on where things are going to be. I think that loan officers that are out there should be positioning themselves, jockeying, making sure that they're in a spot where when that does happen, they're able to take advantage of it and move forward very quickly. Right? Double down, get those marketing things out. Make sure that you're communicating to your clients today. The first ask isn't of them to refinance in 6 months. It's that you've provided them some value along the way. So if somebody does want to, let's say I'm a broker out there, I'm working at a retail shop, and I want to get just some information from you about, what does it look like to come in and move over to Madison Mortgage. I want to find out just some little stuff about, just your company as a whole. Where do I go? What should I do? How should they reach out to you?
So if you're a consumer, obviously you just go to MadisonMortgage.com. But if you're interested as an LO to join us, you can go to joinMadisonMortgage.com. And we have a website set up over there with a lot of information and some contact points, and you can talk to some of our team, set up an appointment to talk to some of our team and answer a lot of those questions, take a look at some of our tech stack and our architecture and see kind of what do we do, how do we do it, what's our approach to things. Talk to some even loan officers that are here that have made the jump to get perspective on folks that have done it recently. And I think that's always very helpful. Join MadisonMortgage.com. You can get all the info you need.
Yeah, and if anybody wants to, like I said, I don't have a horse in this game across the board. I think that some people should go and work at Rocket Mortgage. I think that there are people that go in and partner with Rocket TPO, and that's the best move for them. There's people, that are affiliated with United Wholesale. I think that they're just my own personal opinion. There are a lot of different ways to take yourself to where you're trying to go. And there is not a one size fits all. So if anybody has questions for me and you just want like an honest sounding board, I think that what they're doing at Madison Mortgage is great. And if you had to go work in New York's important, by all means, they're your person. But if somebody just wants to reach out to me and just has questions, I am happy to answer questions as unfiltered and as transparent as I can be. I'm not paid to send people. I'm not a recruiter. I have nothing in the game other than seeing people do well. And the only thing I would have in the game is if you do really well and want to hire me as a coach, okay, then I'm in the game, but I don't care where you work. So if anybody wants to reach out to me, reach out to Shah. I think they've got some really good things going on over there. Good people, hardworking people. At the end of the day, they're just trying to, and I know this because I know Shah personally, he's just trying to see that the people that show up every single day and work get the best out of their 1,440 minutes every day. And if you do that repeatedly, you get a good result. And he shows up, he does sales training. He does weekly trainings. He does a lot of stuff that I just don't see happening across the board at a lot of mortgage companies. Right? He invested to bring me in to do sales training. So it's a good guy, worth the conversation, if nothing else. So that would be what I would say.
I appreciate it, man.
So, well, if there's anything else, you got any The big things that you think somebody needs to hear
Covered it,
about?
man. That was fun. I'm glad we did it. It was fun to jump on and do it. Hopefully some people will watch and get some perspective and get some answers and maybe take a different approach to the business that they maybe did before.
Yeah. And regardless of what your business looks like today, there are incremental things that you can do, every single one of us can do, to make it a little bit better tomorrow. And right, you just take that approach, and when you go to bed tonight, you've got one of two things. You can put your head on the pillow with some results of some things you accomplished, or with some regrets. There is no difference in between the two. There is no alternative. Either you've got results or you've got regrets. So let's go to bed tonight with some results. Hey, I appreciate it. Thanks for your time, and we'll get this out there. Questions, concerns, reach out.
Thanks, man. Have a great day.
If you're still here and you're watching this, you're probably getting something from our content. If so, maybe or I'm sure someone else that could also benefit. So if you could do us a solid, forward this, share it with your friends, other people that are like-minded that want help with simple solutions to grow their business. And if you want to do a little bit of a deeper dive someplace on here, there is a place to schedule a call with us to talk about your business and how we can grow it together. Look forward to hearing from you. Again, thank you for being here. Please do share.